Good day! So our topic for today is reversing entry. So let's now take our journey to our reversing entry. So what is a reversing entry? Reversing entry are usually made to simplify the bookkeeping for the year. And these are entry made on the first day of the accounting period to remove our accrual adjusting entry that were made at the end of the previous accounting period. And take note, this is an optional. So not you are not required to do reversing entry every now and then. Okay? So what are the benefits of reversing? So number one, it reduces the chance of double counting of revenues and expenses. So normally, this means that we could do the way that we record each account at the end of the period and the beginning of the period just like the same if we do the reversing entry. Next, it allows for a more efficient processing of actual invoice that will be processed in the new accounting period. So, meaning you will know that the expenses can still be recorded on the next period despite it pertain to the prior period. We will see that as we go on. So, things to remember in doing our adjusting entry. Number one, it's normally the exact opposite of adjusting entry. And number two, the use of this will not change the amount reported in the financial statement. So, let's remember these two. Exact opposite and no change in the financial statements. So, I lifted these adjusting entries from our previous videos adjusting. So let's check. Salaries of Christopher was unrecorded for the period of the second half of December amounting to 10,000. So our adjusting entry, if you still remember, that's debit salaries expense 10,000 and credit salaries payable 10,000. So let's try our reversing entry. So we put the first our T account so we know the balances as of December 31. So take note, we already eliminated the amount for salaries expense because it's already end of the period. So therefore, we do the closing entries already. And under our closing entries, we close all the nominal account. One of these is expenses. But since payable is a real account, it still have the balance, but it is not being closed at the end of the year because it's a balance sheet account. So let's do our reversing entry. So our entry would be salaries payable 10,000 debit and then credit salaries expense credit 10,000 because number one rule is to do the exact opposite of our adjusting entry. So let's take a look of our adjusting entries made. So see, we do the exact opposite because at our adjusting we debit salaries expense and then credit salaries payable. Since we reverse, we do the exact opposite. Okay, so let's proceed to our T accounts. Take note, our T accounts previously has a balance of 10,000 credit December 31. So for our reversing now, we have debited our salaries payable. Next, salaries expense 10,000. So we already have our beginning balance for negative salaries expense 10,000. But as we said, it should not change any effect in our current year balances. So upon billing and payment, so for example, January 2, salaries of Christopher to be paid on January 2, 2020 for his salaries of the second half in 2019. So our entry would now be, if it's with adjusting entry, we debit salaries expense 10,000 and then credit cash 10,000. Because as I told you before, we should do the normal entries that we do for the salaries expense if it is already being reversed on the current year. But if no reversing entry, the entry would be debit salaries payable and then credit cash. If no reversing entry for that one. So let's see. So this will now be our balances. So we don't have any more payable because we already paid for that. And then we all don't have expenses because the expenses pertain not for the 2020 but instead it's for the 2019. So there should be no salaries expense. So the second rule was also satisfied. The amount should not change the amounts on the current period. So no salaries expense to be recorded for the current period because this salary pertain to the prior period. But it's already recorded in the prior period because we do the adjusting entry, okay? So for cash, we debit cash credited 10,000. Okay? Because we pay in cash the salaries expense and the payable rather. Now, let's take a look if no adjusting entry is made because we said that reversing entry is only optional. So upon payment, the entry now would be debit salaries payable 10,000 and then credit cash 10,000 because we don't do the reversing entry. So entries would now be still no balances for the salaries expense because we don't do reversing entry. But for payable, there's still a balance of 10,000. And since we already paid that in cash, we would put 10,000 on January 2. Sorry, it's supposed to be January 2, not January 1. And then, for the cash, we now have cash credit 10,000. So let's compare with reversing entry and with no reversing entry. And you will see it's just the same. For salaries payable, 0. For expenses, it's still 0 because the expenses pertain to the prior period. But there is a negative 10,000 for cash because we pay the salaries of Christopher, which is really payable for the prior period. Okay? So what are the types of adjusting entry that may be reversed? Because take note, this is optional. If you wanted to do that, you can. If you don't want, then you still can. So number 1 is the accrued income. And then accrued expenses. And then an earned revenue using the income method and prepaid expenses using the expense method. Okay? If you have any question, just comment it below. So thank you for watching. If you like this video, please help me to reach out more people by hitting the subscribe and the like button below. God bless you. If you have question, just comment below and I'll get back to you. Bye!